You ever look at a financial report and just your eyes glaze over? It feels like trying to crack some impossible code, right? Just this wall of numbers and acronyms. Well, that's what we're tackling today. We're going to take one of those super technical reports for a stock, NCL, and we're going to translate it. We're turning this confusing mess into a clear story. Let's get into it.
So, here it is. Look familiar? Yeah, it's a lot. It's that snapshot from the report, and it is totally overwhelming, isn't it? It's like someone handed you a book in a language you don't speak and said, "Good luck." But here's the thing. Every single one of these numbers is a clue, a tiny piece of a much bigger puzzle. But staring at them like this? Nah, it doesn't really tell us a thing.
That's exactly what we're about to do. Think of this technical report as our case file. We're not going to see random numbers, we're going to see clues. And together, we're going to piece them all together and uncover the pretty dramatic story of what's been happening with this stock.
Okay, so where does any good investigation start? You got to establish a timeline of events, right? You have to examine the scene of the crime. So our very first step is to look at the stock's price history for the last 3 months. This is how we figure out what happened, and just as important, when it happened.
And, wow, here's that timeline. So check this out. Back in early October, NCL was trading above $1. But then, November hits and the steady, just punishing decline starts, wiping out more than half its value. The absolute bottom, the climax of this whole thing, happens on December 23rd. The stock hits its lowest point in a year, just over 10 cents. And then, bam! Something totally wild happens. In that final week of the year, it stages this massive, super volatile rebound, more than doubling off its low to close near 27 cents. So the plot is clear, right? A huge fall, a dramatic bottom, and then a really sharp, really recent bounce.
All right, so now we know the what and the when. It's time to bring in our first set of clues, the trend indicators. These are the tools that help us see the bigger picture, beyond all that daily up and down noise. So the big question is, are we fundamentally going uphill or downhill here? Let's find out.
And one of the most important tools for this is the simple moving average, or SMA. Think of it like this. The daily price can be super jagged and all over the place. The SMA just smooths all that out, giving you a clean line that shows the general direction. It's basically how analysts can see the forest for the trees.
And wow, do these averages tell a story. You look at the short-term trend, the 10-day average, and it's sitting around 25 cents. Okay, but then you look at the long-term, the 200-day average, and it's way, way up at $1.71. That huge gap between the two, that's our first major piece of evidence. It confirms, without a doubt, that even with that recent bounce, this stock is in a severe long-term downtrend. It's trading miles below its historical path.
Okay, so we've nailed down the long-term direction. It's down. But what about the feel of these recent moves? The character? Our next set of clues is all about digging into the speed of the price changes. That's the momentum. And just how wild the swings have been. That's the volatility. To measure that speed, that momentum, we use something called the Relative Strength Index, or RSI. The easiest way to think about it is like a speedometer for the stock's price, on a scale from 0 to 100. It tells us how fast and how hard the price has been moving, which can give us a hint if a move is running out of gas or just getting started.
So the report puts NCL's 14-day RSI at 43.02. Now, usually you hear about a stock being oversold when this number drops below 30. So 43 isn't technically in that crazy low zone. But, and this is a really important point, it's still way below the neutral 50 mark. It tells us there was some serious price weakness right before that big rebound. It's like the engine was sputtering and stalling just moments before it suddenly roared back to life. And that brings us to just how wild this ride has been. There's this great saying on Wall Street, volatility is a measure of our ignorance. What it means is, when nobody's really sure what something is worth, you get these huge, chaotic price swings. It's a dead giveaway that there's major uncertainty in the air. And the data confirms this perfectly. The report pegs NCL's true volatility at over 31%. Now, to be clear, that is an extremely high number. It perfectly explains what we saw on our timeline, right? That plunge down to 10 cents and the rocket ship rebound, those weren't calm, orderly moves. They were frantic, they were extreme, and this number proves it.
So we've got a stock in a downtrend that hits rock bottom and then bounces back like crazy. But why? To answer that, we have to look at maybe our most important clue yet. We need to follow the money. We need to look at trading volume. Volume tells us how many people are in the game, and it reveals the conviction behind any price move. Whoa, just look at this chart. The difference is absolutely staggering. For the first 3 weeks of December, this thing was trading so quietly, maybe 150,000 shares a day on average. It was basically a sleepy, forgotten stock. Then, on December 23rd, the exact day it hit its 52-week low, it's like the entire world showed up to the party. The average daily volume for that last week of the year exploded to around 139 million shares. This isn't just an increase, you guys. This is a total change in character. It's like a quiet library suddenly turned into a sold-out stadium. And this number right here just drives the point home. On the day this report was pulled, the trading volume was more than 15 times its recent average. This confirms that massive surge of interest wasn't just a one-day fluke. It was a huge, sustained, and seriously unusual event that happened at the exact moment the stock was bottoming out. This is the smoking gun of our investigation.
All right, investigation time is wrapping up. We've gone through the timeline, we've checked the trend, we've measured the momentum and volatility, and we followed the money. Now it's time to step back, lay all the evidence out on the table, and piece together the complete story of what's been going on with NCL.
So here it is, the story that was hidden inside all those numbers. Our main clue, NCL is in a major long-term downtrend. We saw that with the moving averages. The big event, it hit rock bottom on December 23rd. But, and this is the absolute key piece of evidence, that low point was met with a historic, unprecedented explosion in trading volume. The result of that? A super sharp and incredibly volatile rebound. And where does that leave us now? Well, momentum is trying to claw its way back, but that RSI number tells us it's still starting from a position of weakness.
So when you put it all together, what we've decoded is a picture of a stock at a serious crossroads. The long-term story was pretty bleak, right? But this latest chapter has been absolutely explosive. By turning that wall of data into an actual story, we can now see the central conflict. And it leaves us with the ultimate question an analyst would ask next. Was that insane volume spike the final act of everyone panic selling and getting out? Or was it the very first sign of a real, genuine reversal? The data showed us the story of what happened. The next chapter? Well, that's still to be written.